Welcome back to the channel. Today we are conducting a full deep dive into Pinterest's latest earnings results and financial health. From EPS performance to capital structure and future growth forecasts, we have the essential data for Pin's investors. Before we break down these charts, please like this video and subscribe to the channel for more professional market analysis. Let's get into the report. We begin with a look at Pinterest's current market standing on the New York Stock Exchange. As of the latest reporting, PINS is trading at $16.59, marking a positive move of 1.28% for the day. This gain represents a 21-cent increase in share price. This overview provides the immediate context for our fundamental analysis. Understanding where the stock is currently valued in the open market is the first step in evaluating whether the underlying financial data supports further upside or suggests a period of consolidation. As a major player in the social media and technology services sector, Pinterest's daily price action is closely watched as a bellwether for digital advertising sentiment and user engagement trends. This starting point allows us to transition from simple price tracking into the deep-seated financial metrics that truly drive long-term valuation and investor conviction in the e-commerce and visual search space. Turning to the earnings per share chart, we see a track record of mixed performance over the last several quarters. The blue bars represent reported figures, while the gray bars indicate analyst estimates. In the most recent quarter, Q4 2025, Pinterest reported an EPS of 0.67, which almost perfectly aligned with the 0.67 estimate, resulting in a minor positive surprise of 0.52%. However, the preceding quarters in 2025 were more challenging, with Q1, Q2, and Q3 all reporting negative surprises ranging from 6 to nearly 10%. This followed a much stronger 2024, where the company delivered significant beats, including a 48% surprise in Q1 2024. Looking ahead, the forecast for 2026 shows a projected ramp-up, with estimates starting at 0.23 in Q1 and climbing towards 0.73 by the end of the year. This suggests that while recent performance has been tight relative to expectations, the market anticipates a significant acceleration in profitability throughout the next fiscal year. The revenue data provides a clearer look at Pinterest's growth trajectory and its ability to hit top-line targets. For the most recent quarter ending December 2025, Pinterest reported $1.32 billion in revenue. This was a very slight miss compared to the $1.33 billion estimate, resulting in a negative 0.77% surprise. Despite this minor quarterly variance, the overall trend since early 2024 has been one of consistent scaling. Throughout most of 2024 and 2025, the company maintained a positive surprise streak, effectively meeting or exceeding revenue expectations quarter after quarter. Looking into the future, analyst forecasts for 2026 are highly optimistic. Revenue is projected to grow from just under $1 billion in the first half of the year toward a high of $1.48 billion by Q4 2026. This upward march in forecasted revenue indicates that Wall Street expects Pinterest to successfully monetize its growing user base and expand its advertising platform as we head into the next major growth phase. Diving into the key facts and corporate structure, Pinterest currently maintains a market capitalization of $11.03 billion. Founded in 2008 and led by CEO William J. Reddy, the company has grown to over 5,000 employees. The ownership structure is dominated by the free float, which represents 98.92% of the shares, while closely held shares make up just over 1%. This high level of public float suggests significant liquidity, but also exposure to broader market sentiment. The capital structure is a point of significant strength. Pinterest holds $2.47 billion in cash and equivalents against a very manageable debt of only $262 million. This resulting enterprise value of $8.83 billion is substantially lower than the market cap, highlighting the company's strong net cash position. For investors, this robust balance sheet provides a massive cushion and the financial flexibility to invest in new AI-driven features or strategic acquisitions without stressing the business's fundamental solvency. Valuation metrics are critical for determining the fair value of pins in today's market. Pinterest currently trades at a price-to-earnings ratio, or PE, of 26.82 times. The price to sales ratio stands at 2.63 times. Looking at the valuation ratios chart, we can see how these multiples have shifted over the last 5 quarters. The PE ratio, represented by the orange line, saw a sharp increase in the most recent quarter, while the PS ratio remained relatively stable. This divergence often happens when share price moves faster than trailing earnings or when expectations for future profit expansion begin to be priced in more aggressively. A PE of 26 is significantly higher than traditional value plays, but is often considered reasonable for a technology company with high gross margins and a projected path towards substantial earnings growth. For investors, the key narrative here is whether the company can grow its earnings fast enough to justify and eventually compress this multiple as it continues to scale its global advertising ecosystem. When we examine growth and profitability, the revenue to profit conversion waterfall offers a detailed look at the company's efficiency. Pinterest's gross profit remains a strong percentage of its total revenue, but operating expenses, highlighted by the large pink bar, consume a significant portion of those gains. This leads to a smaller, but still positive, operating income. The net income figure for the most recent quarter shows that after taxes and other adjustments, the company is maintaining profitability, though at a lower margin than its high growth peak in late 2024. The performance chart tracks net margin percentage alongside revenue and net income, showing how the business has stabilized following a period of high volatility. For investors, the focus remains on the company's ability to control its operating expenses as revenue scales. If Pinterest can successfully convert more of its massive top-line revenue into bottom-line net income through better expense management and AI-driven ad efficiency, the profitability story will become the primary driver for the next leg of the stock's performance. Finally, we evaluate the overall financial health and solvency of the company. The debt level and coverage chart reinforces the strong cash position we discussed earlier. Cash and equivalents, shown in blue, consistently and significantly outweigh the company's debt levels across the last 5 quarters. In fact, cash levels have remained robust at over $2 billion, while debt has stayed flat at a much lower level. The financial position analysis compares short-term and long-term assets against liabilities. Pinterest's short-term assets dwarf its short-term liabilities, and its long-term asset base also remains significantly larger than its long-term obligations. This massive gap between total assets and total liabilities indicates a very low risk of financial distress. From a solvency perspective, Pinterest is in an elite position among its mid-cap tech peers. This fortress-like balance sheet allows management to focus entirely on growth and product innovation, knowing they have the liquidity to weather macroeconomic downturns or pivot their strategy as the digital media landscape continues to evolve. In conclusion, Pinterest's financial data reveals a company with a rock-solid balance sheet and a clear, multi-year path toward expanded profitability. While quarterly surprises have been volatile recently, the forecast for 2026 suggests a strong recovery in earnings power. With over $2 billion in cash and very low debt, Pinterest is well-positioned to invest in its future and navigate any market challenges. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on pins and the broader tech markets. We'll see you in the next analysis.